In this video, I'm going to talk about what is momentum trading. Stay tuned. Hey traders, a very warm welcome to you. So, we've probably heard this phrase before, momentum trading. What is it all about? How do we do it? And what's the biggest pitfalls we've got to avoid? Okay, so the law of momentum basically says that an object in motion will continue in that motion until you get an equal force in the opposite direction. I probably absolutely butchered that, but you get the idea, you know the whole point of it, right? So that is what we're defining as momentum. The idea being is that, if a stock's in an uptrend, the theory is it's going to continue in that uptrend. More likely is it's going to continue in the uptrend than it is to reverse. And that makes sense, that's logical, same with a downtrend. So the point of momentum trading is what we're looking for momentum, and we're looking to jump on that momentum and let it carry us, forward, long if we're long, down, short if we're short. That's exactly what we're looking to do. So what are the pitfalls and, what are we looking for with momentum? So first of all, we're defining momentum as literally, an exaggerated movement in one direction. Now, some people will define it differently and say, well, it's just an uptrend. Some people will define it and say, well, it's just, a steady move up. Whilst I accept there's some momentum there, if something's trending quite nicely, even if it's slow, shallow trend, there is momentum. Really, for me, momentum trading is, hey, there's a good amount of move coming in this. I'm expecting it to continue. How can I get involved in it? So first of all, you're kind of looking to say, is it true momentum? Because listen, honestly, this is the sort of thing that I know I've made the mistake many times before, is you're trading momentum strategy and you jump on board stuff that is not momentum. It's just noise. It's just a little burst of volatility and you end up buying at highs or selling at lows or whatever. So you've got to be sure that this thing is momentum. So you've got to be sure it's true momentum. So you've got to give it some time to kind of work out. You've got to look at volume. You've got to look at distance. If you're swing trading, it's like how far has it moved in a week or in a month? Or is there volume there? What's the catalyst for it? Is there a reason why people are coming? Great data, bad data, all this kind of stuff gives you an idea, and you can say, yeah, you know what? There's some true momentum here. It's not just a price spike from nothing. It's genuine momentum here. So number two is trying to find my entry point. Now, obviously, the danger you have is if it's real true momentum, you're not going to find many pullbacks. An example would be, let's say we have, some sort of, news that comes out that eventually filters over the wires that's very, very bullish for the market, whatever that may be. Okay, and we see momentum, the price is moving up. I'm looking on data on an intraday chart here, it's moving up, and then as it gathers more and more steam, it just starts to really rip to the upside. You're not going to get opportunity to buy a pullback. So you've got to make the choice. You kind of say, okay, I need to make sure that it's true momentum first before I dive on it, because by the nature of it, I'm probably going to be jumping in at highs. Obviously, that's from a day trading perspective. If you're swing trading, you kind of still have that thing. And if you look at some of the kind of charts that have got a lot of momentum in the past few years, you'll see they're really getting, they didn't give anyone a chance to get in. So you've kind of got to make the decision. Do I jump on it? If I jump on it early, I'm going to have to definitely chase, but I'm not going to be as sure that it's momentum, and I may risk getting stopped out, and I may risk being the guy who's bought at highs. So there's that. Or I wait to confirm that it's true momentum, that it's got a lot of weight behind it, that it's going to run, wait for the pullback, wait for a good entry, and then strike. Now, of course, the downside is the bulk on the early move will have gone, but you still know there's momentum. You might not be so much in the trade. So you've got to kind of play the game between the two. So momentum trading is literally jumping on that burst of move, that drive, that kind of push, that shove that really you can see there's a lot of volume behind it. There's a lot of institutional buying. There's a lot of participants involved in it. And your job as a trader is purely to jump on that train, run it, ride it for as long as you can, and hop off, almost like a surfer. The wave's coming in, you've spotted it's a good wave, you jump on it, you ride it as far as you can, and you jump off before it smashes onto the shore and pummels your face into the reef or whatever it may be. So that's the job of a trader, and trading momentum works very well, I find, when it's an extreme environment. So bear market momentum works very, very well. It does work very well. Of course, a bull market works fantastically. If you can get in a bull market, that's a lot of growth and a lot of things. I'm defining that slightly differently from momentum trading. I'm saying momentum trading is, hey, listen, it's a multi-day move or multi-week move. much more aggressive than normal, which a bull market tends not to be. However, you do get those bursts, obviously. So you're waiting for the opportunity to shift in supply demand in one way, jumping on it, then jumping off again before it goes back to break even. So that's momentum trading, guys. And the pitfall to watch out for is that you're not chasing it. So the important thing is to try to judge if it's true momentum. So look at that volume, look how quickly it's moved, look at all the parameters, why it's moved, the price position, all that kind of stuff, and then you can make a judgment and say, you know what, if there's true momentum, I can jump in now and I'm gonna get carried with it. If it's not and it's just noise, you know, it's gonna come back and just ping me. As long as I'm managing the risk and capping the risk and I'm getting better at identifying that, then it's a decent, valid strategy to trade. Take care, guys. See you in the next one. Bye-bye.